morning, everyone. My name is Ed Dittmeyer, Senior Vice President of Investor Relations for Nasdaq. Thank you, everyone, for joining us at Nasdaq's MarketSite Global Headquarters, whether it's participating virtually or joining us here in Times Square, New York City, for our 2022 Nasdaq Investor Day. It's wonderful to see so many of you joining us here in person and logging in virtually. Thank you so much for your time and focus on us today. Let me take a moment to pause here on our legal disclaimers and encourage everyone to open this presentation on our ir.nasdaq.com IR website to read these carefully. Now, let me talk about a few logistics today. First of all, the program is intended to run from 8 a.m. To 12 noon, and then we'll have a lunch on site later or some box lunches to go, and we hope some of you are able to join us. The second thing I want to say is that we have Wi-Fi on site. The Wi-Fi network is called MarketSite Guest 2, and the password in all lowercase letters is rewrite tomorrow, one word. That's rewrite tomorrow, and it's on the screens here if anyone forgets it. Now, let me review the agenda for today. We'll start off hearing about Nasdaq's strategic direction from our CEO, Adena Friedman. Next, Nelson Griggs will go over the Corporate Access Platforms Division. After a 10-minute break, Tal Cohen will go over our Market Platforms Division. Then, we'll have a panel discussion on the topic of how Nasdaq leverages specific technologies to elevate growth. That'll be moderated by Nasdaq CIO and CTO, Brad Peterson, and include 4 of our leaders most closely involved in implementing several disruptive technologies into our products and services. After a second 10-minute break, Jamie King will discuss the Anti-Financial Crime Division, and then we'll have a panel discussion on the topic of how Nasdaq can add value to our clients during an economic downturn, just in case one happens. Led by Nasdaq's chief economist, Phil McIntosh, and a panel of business managers, each representing distinct customer segments. Lastly, our CFO, Ann Dennison, will then cover the financial and sustainability discussion in the last presentation. We'll have about 10 minutes of Q&A time after each of the divisional leaders' presentations, and then after the final financial segment, Adena, Ann, and the rest of the management team will be available for an extended 25-minute question and answer session. During the Q&A periods, we'll be able to take questions from in-person attendees, and when you signal to us you have a question, I'll ask you to please wait for a microphone to be brought to you so that virtual attendees can hear it clearly before our management answers. Now, we're going to kick things off with a quick video, and then I'm going to turn it over to our CEO and President, Adena Friedman.
Our world is moving faster than ever before. There's growing uncertainty and an urgency to keep pace, to create a more resilient, accessible, and trusted financial system for our future. At Nasdaq, we know that through uncertainty comes opportunity. We know because we've been there, through the pioneering moments, emerging innovations, and transformative milestones. Today, we accelerate the journey together, approaching uncertainty with ingenuity and action to become the trusted fabric of the financial system by modernizing markets, unlocking access to capital, and fighting financial crime. Because we believe today is another step forward in our relentless pursuit of a better world, accelerating your journey to rewrite tomorrow.
Well, that's always a great way to start with a nice video. I'm Adena Friedman, I'm the CEO of Nasdaq, and I want to welcome you all to our Investor Day. Thank you so much for coming in person. Very different than 2 years ago. We did have some great people here 2 years ago, a few of us, but now we have so many more here today. Well, oh gosh, let's get the I'm trying to speak too loudly and then too softly. Okay, well, I just want to make sure that we level set what we're going to talk about today. And first of all, we are going to spend a little time looking back to say what are the things we've put in place to achieve the success we're currently having at Nasdaq. But we want to spend the majority of our time really focusing on how we're positioning ourselves to continue to grow and expand the business going forward. And so I've got three key elements of the presentation I'm going to give today, focusing first on the quality of our franchise today, making sure that you understand our current business and the journey we've been on to achieve our current success. Well, today, Nasdaq is a highly scaled growth technology company with $3.6 billion of net revenues and a 50+% EBITDA and operating margin. We also, over the last 5 years, have really been focused on developing our solutions businesses. They today represent 75% of our total revenue, and we've been able to demonstrate a compounding growth rate of 9% across those businesses over the last 5 years. The result of that has been that we have now an 11.5% return on invested capital for our shareholders, and we've also been able to demonstrate a double-digit shareholder return consistently over the period of time. Now, what is the framework that we use to determine what businesses we should be in and how we should serve our clients? Today, Nasdaq is really a scaled business, but our goal and our purpose is to advance economic progress for all. Now, how do we do that? We do that through our vision of being the trusted fabric to the financial system. And when we think about, well, how do we do that? Well, our value proposition is to deliver world-leading platforms that improve the liquidity, the transparency, and the integrity of the world's economy. Why is this important? You know, these words, why do they matter? Well, they matter because they really serve as the foundation of our culture, and they help drive our focus and our priorities within Nasdaq. I think it's important to note the three words, liquidity, transparency, and integrity. Those are the three words that really define how we make decisions, the businesses we choose to go in, and how we drive our capital allocation as well as our focus towards our clients in achieving our vision and our purpose. Well, as we think back into 2017, we've really been on a journey to get to the point where we feel like we can deliver that purpose, deliver that vision, and we are really on the way to having a great value proposition for our clients. We started our journey back in 2017 with what we call a strategic pivot. We really thought about how can we make sure that we're bringing our capital and allocating it to our highest growth opportunities. How are we making sure that we also are thinking about the businesses we should be in and maybe the businesses we shouldn't be in. So we made some harder decisions to divest of certain businesses that were really aligned with our strategic direction. And then we also then leaned in with acquisitions that could really amplify our growth, but also deepen our relationships with our core clients and make sure that we're delivering against the vision that we have for ourselves. So we focus on establishing the analytics business with the acquisitions of eVestment and Solovis, leaning into our anti-financial crime capabilities with the acquisition of Verafin, and then really growing and expanding our market technology business with the acquisition of Cinnober. Also, over the last 3 years, we've also then amplified that even further by really focusing on the ESG needs of our corporate clients with some small bolt-ons, but really coupled with very strong execution on an organic basis. So we've really positioned ourselves now to have these incredible growth pillars that carry us forward. And what have they done for us so far? So far, we feel like we've been able to achieve a lot of great things, but we frankly have a lot more to accomplish. But so far, we've been able to double the growth rate of our solutions businesses. We've been able to increase the margin by 500 basis points. And as a result of all of that, we've delivered a 16% compounded annual growth of our earnings. And we're really, really proud of that. But frankly, as I said, we really do believe that we're still just beginning to achieve what's possible here. One of the things we've also been doing over the last 5 years is steadily increasing the outlook that we can provide to all of you in terms of the revenue growth potential that we can deliver over a 3 to 5 year period with our solutions businesses. And in 2020, we did that again. And we said that we would deliver 6 to 9% growth in our solutions segments. We would have a goal for ourselves to have, by 2025, 40 to 50% of our annualized recurring revenues being in the form of SaaS, our SaaS businesses. We also wanted to continue to be able to deliver a double-digit total shareholder return and an enterprise-wide return on invested capital of at least 10%. Well, I think that we've been able to demonstrate a good execution against all of those goals. We've had a 13% increase in our solutions segment revenues on an annualized basis. We have now 35% of our annualized recurring revenue is in the form of our SaaS businesses. We've delivered a 23% total shareholder return over that period. And then we also now have an 11.5% return on invested capital for our shareholders. So lots of good green check marks. But we obviously still have so much more that we can do. And we want to make sure that we help you understand how we believe that we're positioned to continue to elevate Nasdaq to new heights. Okay, so in 2022, we decided to go into kind of a new strategic review. We do strategic reviews every year. We refine our strategic purpose every year. But we did a deeper dive this year to really focus in on what are the mega trends that are going to define our industry over the next decade. And when we thought about that, what are those mega trends that really are important to us and our success? We then said, okay, so that's looking outside in. We then looked a little bit inside, and we said, well, what are our strengths, and frankly, what are our weaknesses, and making sure that we know how can we lean into our strengths to be able to deliver against those megatrends. And then lastly, we also focused on, are we aligned ourselves internally in terms of how we operate our business to be able to deliver against those trends? You know, are we optimized for the growth and scale that we want to deliver going forward? We've had a lot of growth. Are we really making sure that we can continue to achieve that growth with a scalable model? Well, we're going to go through each one of those. So the first is the megatrends. We really examined about probably 10 megatrends that we thought were important to defining the financial ecosystem over the next decade. But we zeroed in on 3 where we believe that we can have very significant impact. The first is markets modernization. And we want to continue to bring the best technology available to the markets to make sure that we maximize the liquidity of the global economy. We look at really focusing in on cloud, machine learning, digital assets, or at least the blockchain technology that underpins that, microservice architecture, all of the things that we think could drive more participation into markets, lower the cost of entry for market participants, and create a consistent experience for them all over the world, whether that's in our own markets or in the markets where we serve our clients with our technology. The second is in the development of the ESG ecosystem. It is an evolution, as you all know. I'm sure you all are living it. But it's really going from commitments and words to actions and results. And we believe that between corporates and investors, there's a common goal to try to find a framework that allows them to understand what they need to do to deliver against that as corporates, and what information they need to have to be able to invest into those strategies as investors. And then the third is anti-financial crime. It is a huge issue within the financial system. It's a growing problem, but there's also more and more powerful technology available now to solve that problem. And so really focusing in on cloud and AI as part of that solution is frankly a cornerstone of that solution and how we can bring that to our clients. So we decided to organize ourselves into 3 divisions. The first division is our market platforms division, really focusing on that markets modernization with our markets businesses, our trading businesses in the United States and in Europe, coupled with our market tech business. And so together, we're bringing that together into one division led by Tal, and you'll hear more about that when he speaks later. How do we think about those together, providing a more holistic solution for our clients? Whether it's bringing more market participants into our market tech clients, whether it's optimizing the private local zone that we now have with AWS and bringing some of our market tech clients into our ecosystem, or creating a roadmap for other markets to be able to create those hybrid cloud experiences for their clients. All of that together allows us to modernize markets and enhance and increase the liquidity of the global financial system. The second is capital access platforms. As again, bringing those corporates and investors together, we can be a neutral bridge, an important bridge, to make sure that we align the corporates with what the investors need to be able to make more informed investment decisions, but also to make sure investors understand the actions and the efforts that the corporates are taking. The third is our anti-financial crime business, bringing our world-leading surveillance business that serves the largest banks and brokers in the world with Verafin, which is a fraud and AML detection service that serves 2,400 banks all around North America, and globalizing our capabilities in a more comprehensive way. So when we think about what that means in terms of the opportunity in front of us and what we're trying to tackle, we have very large serviceable addressable markets that we're trying to serve with our solutions. And I think that it's also, I think it's notable to say we have a lot of runway to go in order to be able to really achieve our potential against those serviceable addressable markets. In anti-financial crime, it's a $7.5 billion SAM, and we're about 4% penetrated at this point. That SAM is also growing at double digits. So it's just a growing opportunity for us to solve more problems for our clients. In marketplace technology, now that we think about it as an overall ecosystem, we're bringing our market infrastructure technology business together with our trade management services businesses to think about both how we leverage our physical footprint and our ecosystem to deliver more for our market participants and our market tech clients, but also how do we think about growing and expanding the role that we have with our market tech clients in their own infrastructure. And so as we deliver more through SaaS and cloud, as we also become more of a managed service provider, the SAM is increased, but also our ability, you can see we still only have 7% penetration, so we still have a lot of runway for growth there. Workflows and insights. That's bringing together our IR and ESG services for our corporates together with our analytics business for our investors, because those platforms, when we think about the bridge we can create, we think a lot of opportunity. You know, with IR services, they deliver services to our investors or to our corporates to help them communicate with investors. And with analytics, they serve and provide insights that allow them to make smarter asset allocation decisions. So together, those are our workflow and insights tools. And again, huge market opportunity of $10 billion, and we're 5% penetrated there. And then lastly, with our index business, it's a unique business. It's a very nimble, very exciting business within Nasdaq. And again, we're about 17% penetrated against what we believe is a serviceable addressable market in that business. So we have large opportunities. We have a lot of runway for growth, and we do believe that we have leading solutions already to be able to bring to bear to be able to achieve success there. So what does that mean in terms of the opportunity and how excited we are to be able to bring all of that forward? Well, we have 3 key ingredients that we think are going to make it so that we can really achieve success against the opportunities that we have in front of us. First is the business mix improvements that we've made in Nasdaq over the last 5 years, and therefore how we're positioned today to continue to deliver growth. The second is how within those great opportunities, how much of that is delivered through SaaS, which is of course highly recurring, very stable, and also delivers a much better outcome for our clients. And then thirdly, how are we unlocking even more potential as we bring the divisional structure and make that a living, breathing part of our organization? Well, thinking about the business mix first, so in 2017, we had about 19% of our revenue was generated from what we determined were our higher growth segments, our index business, our market technology business, and our analytics business, which was the eVestment Solovis business, or actually eVestment back then. So that was about 19% of our revenues. Well, today, we actually have added a couple of incremental pillars to those growth businesses with our Verafin acquisition, so our anti-financial crime capabilities, as well as by expanding the analytics to look at both the corporates and the investors. And those are now growth businesses for us. Our corporate platforms business has done a spectacular job of really developing and enhancing our IR and ESG services so that they've become a real growth driver for the business. So IR and ESG plus our analytics business now is workflows and insights. And then we also still have our marketplace technology business. Well, that now represents 42% of our revenue. And so we believe that we still have this wonderful opportunity to continue to accelerate and advance our growth on the back of those higher growth opportunities. But we also are really focused on how we deliver those services to our customers. And we've been migrating and making sure that more and more of what we deliver is in a SaaS format and that we're turning ourselves into a SaaS company. Now, in 2017, we had just under $250 million of SaaS revenue. But today, we have just under $700 million of SaaS revenue. We also talked to you back 2 years ago about the fact we want our SaaS revenue to become 40 to 50% of our annualized recurring revenue by 2025. And we are on pace to do that. We're now at 35%. We still want to be able to deliver greater than 40% by 2025, and we believe we can be even greater than 50% by 2027. So we're adding that as now a new 5-year goal for us. Additionally, as we start to operate ourselves and think about ourselves as a SaaS business, we need to start to measure ourselves as a SaaS business. So we are starting to introduce to you some new metrics that we're going to provide on an annual basis that allow you to have a little bit of insight into how we're doing as a SaaS company. So just as a starting point, we're going to provide you with gross retention, non-GAAP gross margin, and our progress against what we call the Rule of 40. The Rule of 40 is the revenue growth rate of the businesses combined with the margin, the EBITDA margin of those businesses. You add those two numbers together to get to, hopefully, a number close to 40. So right now, we are at 94% gross retention across all of the SaaS businesses that we operate. We have about a 72% gross margin, and we're delivering 38 against the Rule of 40. So it's a really great starting point, I would say. Now, how we want to make sure that we make progress, that's up to us to be able to demonstrate to you over time. But now you'll be able to start to measure us on an annual basis as we continue to progress ourselves as a SaaS company. The third thing is the realignment of our organization. And I already went through the divisional structure. But if I think about, I'm actually going to go from bottom to top. What I really think about is, first of all, how are we operating as a business? We've been doing a big progress. We've been making a lot of progress on our agile transformation here at Nasdaq over the last several years. And when you think about an agile orientation to delivering for your customers, you really think about product development, product marketing, product management, sales, all of that being a combined effort in a really seamless organization, getting everyone close to the customer so they can deliver better for your customers. Well, as a result, we're bringing our product development and our software engineering teams that support the divisions, as well as the product marketing teams that support divisions. We're bringing those now into the divisions. They will be part of our divisional framework. That allows those individuals and those experts to be closer to our customers, to continue to be very nimble in delivering for our customers, and still allowing us to scale and grow really successfully within the divisions. The second thing is that we want to make sure we're allocating our capital on our biggest growth opportunities, and particularly against the mega trends that we've been discussing. The third thing is we also are really focused on people, process, and systems that deliver the client experience. So we really continue to invest there, and we will continue to invest there. We're, I would say, still early days in modernizing how we focus on our sales, people, process systems, how we're focusing on our client service, people, process systems, to make sure that it's as modern as possible, that our clients are feeling like we have a really well-oiled machine across everything we do. And as we think about that at the divisional level, that's a new challenge and a new opportunity for us to even do more for our customers in that way. And then lastly, of course, is to deliver more strategic solutions to our customers. This is all about the customer. How can we find new opportunities to do more for them? How can they feel like they're a partner to us and make sure that we are helping them achieve their goals against the megatrends that we've identified? Well, what does that mean, though, for the growth outlook for Nasdaq? Over the last 5 years, we've consistently improved the growth outlook of our solution segments, and we're doing that yet again today. We believe that over the next 3 to 5 years, we should be able to deliver an annualized growth rate of 7 to 10% across our solutions businesses. And when we look at that in the context of all of the different metrics that we want to use to define ourselves, we have 7 to 10% growth in our solutions businesses. We have a 50%, hopefully to get to more than 50% of our annualized recurring revenue becoming in the form of SaaS, from our SaaS businesses. And then we also want to continue to be able to deliver at least a 10% return on invested capital for our shareholders, but also we're adding that it should be in excess of our WACC. Our WACC has, as every WACC has gone up over the last several months with the increase in interest rates and the volatility in the markets, we're going to look at it as both a combination of greater than our WACC and at least 10%. And if we do all of those things successfully, we believe that we can continue to deliver to you a double-digit total shareholder return. So to sum it up, we have strategically pivoted the company and improved our performance. But we also feel like we're now really, really well positioned to capitalize on the largest secular growth opportunities in our space. And we want to make sure that we're starting with a strong position. We have differentiated solutions. In many cases, they're truly world-leading solutions to deliver for our customers. And now with the divisional alignment, we'll be able to do that in a more strategic way. And we believe as a result of that, we should continue to be able to elevate the growth potential of the business. So I just want to make sure that you hear from me that we are so excited to have you here. We're extremely excited what we can do over the next 5 to 7 to 10 years to continue to redefine our space, redefine our relationships with our customers, and bring them into the future. And hopefully over the next 3 hours now, or 3.5 hours, you're going to hear even more from all of our leaders to make sure that you feel that we have great confidence in our ability to execute. Thank you very much, and I'm now going to hand it over to Nelson.
Okay, my mic on? Well, thank you, Adina, and I'm Nelson Griggs, and I look forward to discussing the Nasdaq's Capital Access Platforms division with you all this morning. So as you can see with the agenda here, I want to begin with our strong franchise. If you take a look at this division's financial performance at a glance, we've had very, very strong annual recurring revenue growth that's made up of significant amount of annual recurring revenue coupled with high quality index AUM and really a terrific margin. So we believe the division has a very attractive financial profile. I want to take a quick moment to talk about how our division supports the strategic framework that Adina just highlighted. We also have in our division a new purpose, vision, and value proposition that my team is really excited about. And I want to call attention to the vision of really being a trusted partner to our clients as they make informed decisions. That trust is something that we have earned at Nasdaq over years and years of working with our clients. We truly think about it each and every day. And you'll hear a lot about that as I talk through the presentation here, because it's allowing us to do more and more with a really rapidly growing client base across this division. So who are our clients? Well, this division sits at the intersection of over 15,000 corporate and investor clients all across the globe. And as the division came together, we thought about who our buyers are. Well, they are really the key strategic decision makers within inside organizations. And in many cases, we work with multiple personas inside a client, and that leads to very deep and sticky relationships. So within this division, we recognize there's several key secular trends impacting both corporates and investors. Adina highlighted a few. Clearly, ESG is on that list, but also the need for more digital workflow. So this division sits on a lot of data insights that impact both corporates and investors. So we believe our key opportunity is to accelerate our product growth and introduce more products to our clients that they're asking us to do, as well as think about cross-sell and upsell opportunities. So we think we have a lot of opportunity to expand what we're doing with our clients. But we're doing a lot today. So this slide I wanted to show you here is really the segment breakdowns and what we are doing with our client base as we focus on really marketplace transparency and supporting our clients' critical decision making. So in these new reporting segments, we have our core data and listing business, which is truly world-class. There's a growing index business that's unique, differentiated, with a lot of new products coming to market and a lot of diversified products. And then on the right, as Adina talked about, our workflow and insights that's comprised of our software, analytic tools, advisory services across both corporates and investors. And they really work with clients each and every day to help them make critical decisions, as well as communicate to their key stakeholders. So the summary of these last two slides is we have a rapidly growing client base across the entire world, and we're doing more and more with them as we think about how we can service them and help them really achieve their goals. So if we take a look at how we performed since the last Investor Day, we believe we've had very strong financial performance across really every metric that you'd want to measure. But I want to call out some of our key accomplishments. We've had a lot, but they both focus on this idea of having more products in market and thinking about each client and how we can do more with each client. So the two I'll highlight here was we've introduced 80 new ETPs in the last 2 years. That's at a far more rapid pace than we have done historically. And then within our public corporate client base, we have 29% increase in the clients using more than one product. So although these are just two examples, across every product we have, we're thinking about what's next, what are our clients asking for, and then how is each and every client taking advantage of all we have to offer. So looking at a bit of more long-term, we believe we're very well positioned for financial success when you look at our financial metrics. So we've had strong annual revenue growth across the last 6 years. We've also have a gradually expanding margin. If you look back to 2018, the margin came down some due to the investment acquisition. We've gradually built that back up, and we have increased operating income on an annual basis of 14%. So again, I think very strong, both short-term and long-term performance across this division with a lot of opportunity to continue this trend. So now I want to move to some of the key strengths and how we're across the various reporting lines. So as mentioned, the listing and data business is foundational and really world-class. In the listing business, you see across really every measure we're taking market share, both in the US as well as in Europe. The new listing market is clearly not open at the moment, but we do believe we're very well positioned to continue this momentum when that time does come, when the market opens back up. In the data business, we are delivering premier content to over billions of users on a daily basis through a wide range and expanding range of APIs, as well as partner applications to deliver a frictionless experience to the end user. And we are finding more and more clients across the globe have demand for our data services, and we are introducing a lot of new and onboarding new unique data sets that are driving more value to the products we offer today. So the combination of these businesses has resulted in a 7% annual revenue growth over the last 6 years. Taking a look at the index business, we are leveraging an amazingly high-profile brand to drive what is exceptional long-term growth. What we're demonstrating here is that across the entire world, our brand, our products, and what we believe are unique partnership capabilities are in very, very high demand. We also have a truly, truly incredible team that's building unique products for a growing group of partners. And this whole slide is meant to represent that we have this great foundation that we believe we can build upon to do more and more with this business. But it has had a pretty amazing 25% annual revenue growth rate over the last 6 years. I want to dig a little deeper into some of the competitive statistics. So if you compare us to the 3 largest competitors on an annual revenue growth, we believe we have far achieved the industry peers. And looking at the average annual organic net inflows, we're averaging 15% in the last 4 years. And then the growth and interest in our futures products that are tied to all these offerings has truly been fantastic. So across the board, this is a real strong franchise that we plan to capitalize and do more with. So now I want to turn a bit to our workflow and insights business and give you a little bit more detail about who these clients are. So this division is focused, or this segment is focused on transparency and digital workflow across a really expanding global client base. Looking at the asset owners, we're working with over 740 of the larger asset owners in the world. These are pension funds, funds of funds, family offices, endowments, a really big market to go after, as well as over 1,000 asset managers using our platform as well. In addition to that, we have over 6,500 corporate clients leveraging our corporate services solutions, and about 40% of those are Nasdaq listed, and 60% are non-Nasdaq listed. So what we're doing in this group is delivering, again, really critical software solutions, bringing insight, data, communication to we help them communicate with their stakeholders and clients. And it's not really a straight line going from asset owners to managers to corporates, but all of these clients care about what each other is doing. So again, we sit on a lot of unique insights, trend data that's allowing us to go to market and think about how we can do more with these client bases. So now I want to turn to a video, and I'm going to give you a quick look at how a client is leveraging Solovis.
I am Jonathan Grable, the Chief Investment Officer for the Los Angeles County Employees Retirement Association. Lucera's mission is to produce, protect, and provide the promised benefit. That benefit is a retirement benefit for the 187,000 active and retired members of Lacera, similar to the Nasdaq mission of providing a variety of services to enhance global capital markets, to provide necessary information, capital formation. Lacera values fully functioning capital markets. Those capital markets and our program is enhanced by better transparency. Transparency is critical for Lacera. Technology gives us better information about our portfolio. We can make faster decisions, more informed decisions, more real-time decisions. We have access to position-level data and analytics, which is necessary in the current environment where capital markets are more challenging. And with more challenging capital markets, more timely, transparent, and useful information